Boustead Plantation Berhad BPB is one of Malaysia's most experienced and established upstream oil palm plantation company and a subsidiary of Boustead Holding Berhad BHB, one of the country's oldest. It has over 100 years of plantation industry knowledge and over 50 years of oil palm plantation estate management experience, backed by BHB position in the plantation business. This company is such an investment holding firm with an interest in oil palm farms. It is primarily involved in the ownership and operation of oil palm plantation, the growth of oil palm, and the harvesting of its fresh fruit bunch (FFBs), and the production and marketing of crude palm oil (CPO) and palm kernel (PK). In addition, this company sells oil palm FFBs and offer mill design and consulting service. Vision of the company: first, achieving strategic growth; second, safeguarding the environment; third, embracing the diversity of people. Mission of the company: first, committed in our focus on R&D and implementing breakthrough solutions at all levels and process to maintain our technological. Second, achieve greater economies of scale and operation efficiency by consolidating and expanding our land banks in Malaysia. Third, to implement sustainability standards as per BPB's sustainability policy. Fourth, cultivate a capable talent pool and provide employees with opportunity for personal and professional development to enable them to fulfill their potential. And lastly, explore business opportunity. Horizontal analysis is a method where financial statements are compared to reveal financial performance over a specific period of time. The formula for horizontal analysis percentage, which is amount in comparison year minus amount in base year divided by amount in base year and multiply 100. So, using formula, we will get the answer as we can see in the slide. NM is stand for net meaningful, which is about gain on disposal of plantation land. Zakat and impairment losses percentage change are calculated as NM, since the percentage change will be negative even though the company made positive change cash inflow to the relative account. Vertical analysis is a method of analyzing financial statement that lists each line item as a percentage of a base figure within the statement. The formula for vertical analysis is income statement item divided by total sale multiply 100. In 29, we have got 91.72% and in 22, we have got 37.25%.
Hi, I'm AIDIL with the ANUAR and the next number is 284225. I'm going to introduce to you about the current ratio and the receivable turnover for the Boustead Plantation Berhad. Now, let's take a look on the current ratio. Current ratio is calculated simply by dividing the current asset by the current liabilities. The resulting number is the number of time the company could pay its current obligation with its current asset. However, in the most cases, a current ratio between 1.5 and 3 is considered acceptable. Some investors or creditors may look for a slightly higher figure. By contrast, a current ratio of less than 1 may indicate that your business has liquidity problems and may not be financially stable. Current ratio value for both years is lower than 1 and it may indicate liquidity problem for the company. Though the company may still not face an extreme crisis, it is stable to secure the other forms of financing. As we can see, 2020 current ratio is better than 2019. In simple terms, it is only 0.21 cents from the current asset to settle the warranty current liabilities. This means the more you have from the current asset to settle the debt, the more stable you in the financial. Receivable turnover. Receivable turnover is a measure of how quickly company is collecting its sales that's made on credit. The account receivable turnover ratio is calculated by dividing net sales by the average account receivable, which is beginning plus the ending receivable then divided by 2. The general rule of thumb is that the higher the account receivable turnover rate, the better. This means higher you receive payment for that, which increase your cash flow and that allow you to pay your business's debt, like payroll for example, more quickly. Your collection method are effective. As a result, for the year 2020, this company more efficient as it has a higher portion of quality customers that pay their debts quickly compared to 2019, for the rising from 0.84 to 1.02 and include an increase of 0.18%.
Next, we are moving on to profitability and total asset management analysis, which is for profit margin, asset turnover, and return on assets. The first one is profit margin. Profit margin gauges the degree to which a company or a business activity makes money, essentially by dividing income by revenues. Expressed as percentage, profit margin indicates how many cents of profit has been generated for each ringgit of sale. For 2019, for each ringgit generated on sales, a net income of 15 cents is obtained, while as for the year 2020, for each ringgit generated on sales, a net income of 31 cents is obtained. The formula of profit margin is revenue minus cost, which is then divided by revenue. Next is asset turnover. Asset turnover is the ratio of total sales or revenue to average assets. This metric helps investors understand how effectively companies are using their assets to generate sales. For 2019, the company has a low asset turnover ratio of 0.04. It indicates it is not efficiently using its assets to generate sales, while in the year 2020, the company has a slightly higher asset turnover ratio of 0.05 than last year, but it still indicates it is not efficiently using assets to generate sales. The formula of asset turnover is net sales divided by average total assets. And next, we have return on assets. It shows the percentage of how profitable a company's assets are in generating revenue. In 2019, the company generates a profit of 3 ringgit and 98 cents for every 1 ringgit in total assets. And for 2020, the company generates a profit of 2 ringgit and 1 cent for every 1 ringgit in total assets. The formula for return on assets is net income divided by average total asset.
Hi, my name is Umar and I'll be doing the financial risk analysis. Return on equity is a measure of financial performance calculated by dividing net income by shareholders' equity. Because shareholders' equity is equal to a company's assets minus its debt, ROE is considered the return on net assets. ROE is considered a gauge of a corporation's profitability and how efficient it is in generating profits. In our example, the income available to Boustead Plantations common stockholders provided a 10.26% return on their investment in 2019 and a 19.48% return on investment in 2020. The return on equity is higher in 2020. The debt-to-equity ratio is used to evaluate a company's financial leverage and is calculated by dividing a company's total liabilities by its shareholder equity. The DE ratio is an important metric used in corporate finance. It is a measure of the degree to which a company is financing its operations through debt versus wholly owned funds. More specifically, it reflects the ability of shareholder equity to cover all outstanding debts in the event of a business downturn. The debt-to-equity ratio in 2019 is 0.7 and 0.75 in 2020. The ratio is higher in 2020 than 2019. This means the company has acquired more debt financing in 2020 and has larger obligations to be fulfilled before the owner's claim can be satisfied. The interest coverage ratio is a debt and profitability ratio used to determine how easily a company can pay interest on its outstanding debt. The interest coverage ratio is calculated by dividing a company's earnings before interest and taxes by its interest expense during a given period. It represents how many times the company can pay its obligations using its earnings. The interest coverage ratio measures the ability of the company to pay interest payments. The ratio in 2019 is 1.17 times, while in 2020 is 2.05 times. The ratio is higher in 2020, which means that the company is able to pay off interest payments 2 times over than in 2019. Thus, the firm has better ability to pay off long-term creditors in 2020.
Cash flow yield. We can calculate the cash flow yield by dividing the net cash flow from operation by net income. In 2019, Boustead Plantation Berhad cash flow yield is 0.3 times, which means that 44,756 million of net cash flow from operation divided by 137,800 million of net income. While in 2020, the cash flow yield is 0.9 times, which means that 67,081 million of net cash flow from operation is divided by 72,968 million of net income. Therefore, in 2019, Boustead Plantation Berhad operating activity generate 30% less cash flow compared to net income, indicating that the company generate 3 cents for every 1 ringgit Malaysia in net income, whereas in 2020, it generate 90% less cash flow compared to net income, indicating that for every 1 ringgit Malaysia in net income, the company generate 9 cents. Cash flow to sale. The cash flow to sale formula is net cash flow from operation divided by sale, then multiplied by 100%. In 2019, Boustead Plantation Berhad cash flow to sale was 29.79%, which is calculated by dividing 44,756 million of net cash flow from operation by 150,238 million of sale. While in 2020, the cash flow to sale was 34.25%, with 67,081 million of net cash flow from operation divided by 195,851 million of sale. As a result, Boustead Plantation Berhad generate 29.79% of its net cash from sale in 2019 and 34.25% of its net cash from sale in 2020. This shows that Boustead Plantation Berhad was able to generate more money from its sale in 2020 than in 2019. Cash flow to asset. The cash flow to asset may be calculated by dividing the net cash flow from operation by the average total asset. As a result, the cash flow to asset of Boustead Plantation Berhad was 1.29% in 2019 and 1.85% in 2020. The cash flow to asset for 2019 can be calculated by dividing the net cash flow, which is 44,756 million, with the average of total asset and multiply with 100%. The average of total asset could be calculated by dividing of total addition of RM3,628,119 and RM3,295,672 with 2. While the cash flow to asset for 2019 can be calculated by dividing the net cash flow, which is 67,081 million, with the average of total asset and multiply with 100%. The average of total asset could be calculated by dividing of total addition of RM3,624,063 and RM3,628,119 with 2. Thus, in 2019, each ringgit Malaysia of Boustead Plantation Berhad asset generate 1.29 sen in operating cash flow, and in 2020, it generate 1.85 sen. This means that the cash flow is positive.
Price to earning ratio. The formula of PE ratio is market capitalization divided by the net income. In 2019, the calculation shows that the PE ratio of Boustead Plantation Berhad is 12.34 by dividing 1.7 million of market capitalization with 137,000 of net income. While in year 2020, the calculation shows that the PE ratio of Boustead Plantation Berhad is 19.19 by dividing 1.4 million of the market capitalization with 72,968 of net income. As we can see, in 2019, the PE ratio of Boustead Plantation Berhad was 12.34, while on 2020, Boustead Plantation Berhad PE ratio is 19.19. Thus, it shows that Boustead Plantation Berhad earned more in 2020 than 2019 in their trading. Dividend yield. The formula of dividend yield is annual dividend per share divided by price per share. In 2019, the calculation shows that the dividend yield of Boustead Plantation Berhad is 4.5% by dividing 1 cent of annual dividend per share with RM22,400 of price per share. While in 2020, the calculation shows that the dividend yield of Boustead Plantation Berhad is 4.5% by dividing 0.5 cent of annual dividend per share with RM11,200 of price per share. As we can see, the dividend yield for 2019 and 2020 is 4.5%. Therefore, an investor will earn 4.5% on share of Boustead Plantation Berhad during both of the year in the form of dividend.